Hey YouTubers, welcome back to my channel. Today is another market moments video. So as always, I pick a few key stories from the last week that has stuck out for me. So today, I've decided to talk about how Kylie lied to us all, what is going down on the biggest tech IPO of this year, why Facebook and Twitter can't see eye to eye, and finally, has Bruno Mars finally become a billionaire? While you watch the intro video, why not hit the like button if you want to be a billionaire so freaking bad, and leave a comment to let me know what your favourite Bruno Mars song is. So, from Bruno wanting to be a billionaire to Kylie Jenner, back in August 2018, Forbes had Kylie plastered all over their cover page, as she was very close to hitting the billionaire status with her Kylie Cosmetics. Then she managed to land a deal with Ulta Beauty to sell her lip kits at over 1,000 stores, which seemed to be enough just to tip her over to that billionaire status. And then in March 2019, Forbes actually confirmed that at the time she was 21, Kylie had become the youngest self-made billionaire, if you could even call a Kardashian self-made. Now, late last year, Kylie managed to sell 51% of her company over to Coty for a deal valued at $1.2 billion, which basically confirmed what Kylie has been saying for the past few years, that she's actually a billionaire. But guess what? When Kylie was running her business, it was a private company, so public records were not needed to be published. So we just had to really just take her word for it. But Coty, on the other hand, they are a public traded company, and so when they had to release their filings publicly for the last 6 months, it was significantly clear that Kylie's business was actually a lot less profitable than the Kardashians have been fanfaring about for over the last few years. Now, this resulted to Forbes publishing an article titled "Inside Kylie Jenner's Web of Lies." So let's look at the numbers. The Jenners told the media that Kylie Cosmetics made $307 million in 2016, and then $330 million in 2017 in sales, and then $360 million in 2018. But what Coty revealed was that the cosmetic company actually only did $125 million in 2018 and $117 million in 2019. So now, if the 2016 and 2017 numbers could be true, it's pretty clear that the 2018 numbers aren't. And also, it kind of means that Coty paid a fortune for a rapidly growing brand whose sales halved within a year. Now, Forbes went on even further to suggest that her tax returns were likely forged. Now, Kylie has since hit the Twitter sphere to reach out to her millions of followers in order to defend herself, as you can see in the tweets around me. But when your CEO decides to quit after Forbes releases an article like that, it doesn't really help her case. But I'm sure more will unravel around this story. But the main thing would be whether the information presented to Coty was falsified or not during the purchase agreement, as that could change things for the worse for the cosmetic company. So I guess I probably won't be rushing to buy any stocks in this beauty company as it stands right now. Let's move on to the biggest tech IPO of the year so far, and that's with the company Zoominfo. Not to be mistaken for Zoom, however, which is already obviously publicly traded and has been used by pretty much every one of us since the lockdown. But going back to Zoominfo, the company is actually a subscription-based data service that companies buy for their sales teams. And with the company's slogan as "Hit Your Sales Number," they must have a full-on sales intrusive approach. And you won't be wrong. The company basically uses an AI-powered database to crawl through the internet to gather all the important details that salespeople need in order to get hold of the decision makers within a company. But hey, Zoominfo shares soared over 60% with its NASDAQ debut last week. So clearly they're doing something right, as they have 15,000 customers using their platform in order to build out and reach their sales network. I mean, If you were a salesperson, wouldn't you love a software that automatically built out organization charts and collated emails and telephone numbers for the potential leads that you may need? Seems like a no-brainer, right? On top of all of this, some of the biggest sales platforms in the world, Salesforce, Oracle, Microsoft, all have integrated Zoominfo into their own sales tools. But one of the main issues with this company is it's basically how Airbnb is the world's largest hotel company, but they don't really own any hotels. Similarly, Zoominfo's core subscription product depends heavily on internet search engines. Therefore, they only work as long as they can trust companies like Google to continue reeling in its customer info. But search engines are also known to change their algorithms every now and then, which can make a huge impact for Zoominfo. So I think I'll be keeping an eye on Zoominfo because if the largest sales platforms has already integrated their software, it definitely means that they're doing something right. Now, why is Facebook and Twitter back in the media again? Well, it seems as though they're not seeing eye to eye. And of course, when we talk about social media, we also need to bring Trump into the picture. And basically, Twitter and Facebook have decided to take very different approaches to one of Trump's latest posts. Now, a couple of weeks ago, Twitter had a feud where they labeled Trump's tweet about mail-in voting as potentially misleading. And now they have another battle with Trump. This time, it starts with Trump's tweet where he calls looters thugs who are dishonoring the memory of George Floyd. And of course, Trump decided to take it even further by saying when the looting starts, the shooting starts. And he decided to cross-post this on Facebook as well. So Twitter immediately took action and flagged and shielded the tweet, saying it violated its policy against glorifying violence, making the tweets hidden and only accessible if you click on a box in order to reveal the context. And they also stopped it from being able to be retweeted. Whereas Facebook left the post as it is, as their policy is to refrain from fact-checking or removing politicians' posts. However, they do also have a policy of removing posts glorifying violence. But another thing to remember here is that on top of all of this, Zuckerberg has 58% control over Facebook's voting shares. So unlike most of the CEOs, he actually has the final say over everything. That also includes things like this, which then ended up leading to Facebook employees getting a little bit worked up and decided to leave the building. Well, during this time, this leave the building was a virtual leave the building. So that meant pretty much shutting off your MacBook Pro, signing out of Zoom, and logging out of Facebook's version of Slack, Workplace. Now, some staff members took it even further and decided to change their company profile image to the Twitter logo. Now, at the end of the day, both companies have their own arguments though, where Zuckerberg says he did find the post deeply offensive, but he feels it's better to have this discussion out in the open. He argues that Facebook is helping democracy by not shielding the president's post, whereas Twitter argues that it's helping democracy by shielding people from the president's post. Kind of sounds like the dilemma of the chicken and the egg. So I guess this all ends up coming down to the government regulations, especially with the executive order signed by Trump threatening social media companies immunity from legal liability of their users' posts and actions. But whatever regulations that ends up being applied will end up affecting both Facebook and Twitter. And finally, I wanna be a billionaire so freaking bad. Has Bruno actually done it? Not quite. This story is actually about the record label Warner Music and Atlantic Records, who Bruno is signed under, along with Dua Lipa, Cardi B, and Ed Sheeran, plus many more. Now, Warner Music is the third largest in the music gangs, after Universal Music and Sony Music. However, they are the only pure music company, whereas the other two are obviously parts of huge conglomerates. But last week, Warner Music saw enough market momentum to take their music public with their IPO, which saw a 20.5% increase on the first day of trading, making a market cap valuation of $15.36 billion. Now, with the whole lockdowns everywhere, Warner obviously took a hit from concert promotions and tour merchandise. However, streaming obviously was on the uprise, and it has been accounting for more of the business each and every year. In 2019, Warner made 86% of their total sales through recorded music, and most of this is thanks to streaming. Now, the deal that they have here is that Warner Music signs up artists and negotiate with streamers like Spotify to get paid on the amount of listens that they get. They then end up giving 40% over to the artist as royalties. And thanks to the new album from Dua Lipa, streaming sales had a 12% surge in April. And more streams means more money, more money, more money. So it looks like Warner is going to be a company to watch, because if they can do well during the pandemic, when things begin to reopen, they will do even better with the revenues from the live events. Also, if you do buy stocks in Warner, it's also kind of great to know that when you're listening to your favorite artists, you could be increasing the value of your own stock. So these were the top picks from the companies that I have been looking into in the last week. But as always, I'm not a financial advisor, and this is just an insight into my own research in those companies that I've been looking at. And of course, if you do feel like taking any of my advice from what I've said today, make sure you do your own due diligence along with it. But one thing you don't need to do any more research on is hitting that subscribe button. Make sure you press the bell as well so you can get notified when my next video is coming out. And also, don't forget to like the video and comment and share. See you on the next video.